What's up, family? How y'all doing today, man? On this Thursday, May 13th, 2021. First of all, welcome back to the Wealth Giant Academy channel with your host, Enoch the Wealth Giant. Listen, man, I know I got to be making more videos for the family. I get it. I just been in some crunch stuff going on, especially after the Mother's Day weekend. Then I'm getting ready for my trip up to New York, which is going to be in Jersey for family and for business. But listen, y'all, I just want to give an update right quick, man. To all my holders in this market that ain't selling, hooray, hooray for you. I want to explain some things to y'all, man. For a lot of people that's been seeing red lately, a lot of people been asking questions like, is it going to be a stock market crash? No. It's not going to be a stock market crash. It's a pullback, and it's basically, like I've told y'all before, looking at the history of the market. Certain times every year, things happen. There's always going to be corrections in the market for the good and the bad. Right now, this correction just lasting longer than what we expect, but it's not going to be a market crash. People trying to compare to 2008. No, none of that. And people talking about the gas. Was this a conspiracy? I don't get off into stuff like that. I like to deal with the real. If it is a conspiracy, basically ain't nothing we can do about it. We got our money in this market, so we got to just ride with the whales, the hedge fund guys. But the gas situation is a situation that should be over in a couple of days for those of you in big metropolitan areas. Then there's a lot of little, like, no-name gas stations that's been holding gas. So me and my family had no issue with gas, and I drive over all around Atlanta all the time. And all our cars are straight as far as the gas. I had to wait in line yesterday, but not even long. So hopefully that gas situation gonna straighten itself out. Which brings me to stock picks. So listen, well, before I even get off to the stock picks, let me say this. The stock market is not going to crash. It's just, like I said, it's a longer pullback, a longer correction than we expected. But don't sell. That's when you lose. Don't sell. Believe me, just hold out. And I wouldn't advise everybody to keep buying the dip, not on smaller growth stocks. Don't buy the dip. If you got a certain position held out, if you got 100, 125 shares of a certain small growth stock, then just chill, let it catch up. You know what I mean? And if you want to, then maneuver out of that position. Once you get in the green, once you get any type of gain, 5, 10% or whatever, and you ain't really feeling that particular stock no more, then just pivot out of it and put that money into longer growth stocks. Like I always tell y'all, like proven dividend stocks like Coca-Cola, Apple. Apple is still a top tech stock, even though the tech stock's been taking a hit lately. Apple. There's a lot of other tech stocks. And like I said, I'm going to show y'all how to screen stocks and get the best stocks. Large cap, medium cap, less than $30, $20 stocks that are basically going to blow, that the hedge fund guys got their eyes on. A lot of these hedge funds got these stocks already in their portfolios. So this is what we want in our portfolios. Your Procter & Gamble's, your Johnson & Johnson's, IRM, Iron Mountain, which is a real estate stock that I was telling y'all about a couple of weeks ago. It's a great stock. Me being a real estate investor, of course I got to do that. I ain't seen no red in IRM. I ain't seen no red in Coca-Cola. I haven't seen much red in Apple just the last couple of days, but they ain't dropped too far below $124. But when they dropped, I think 2 days ago, they dropped like 122. I bought some more. I bought the dip on Apple because these are strong stocks that you should buy the dip on. Coinbase dropped all the way down to like 260. I bought like 10 more shares of Coinbase because I know crypto ain't going nowhere. And I'm going to touch on Dogecoin a little while too, with Elon Musk and what he just said about Tesla not accepting Bitcoin. I'm sure a lot of y'all probably heard this news. And actually, when he made this particular comment, Bitcoin dropped a little bit. It's under 50,000 now again. But anyway, I'm not going to focus on Elon Musk and Tesla. But I'm here to say this. Like Coinbase, now I got my average cost down to under $300. That's what I want to do anyway. So my average cost for every stock, I got almost like 40, 50 shares of Coinbase. And I'm going to show y'all my portfolio in a minute. Now my average cost for all of my shares of Coinbase is under $300, like $290 something. This is what I wanted anyway. If I can get it a little lower, because I know Coinbase is gonna blast off in a little while. As soon as we come up out of this mess, believe me, Coinbase and Bitcoin and Ethereum, as far as crypto concerned, is gonna blast off. But Coinbase, of course, is on NASDAQ, is on the stock market as a company. And Coinbase is, we know, the biggest cryptocurrency platform. So if you can get that, if you can, Coinbase is down right now. And matter of fact, let me just show y'all. But we'll go to it. But if you can get your average cost down on Coinbase under $300, you're doing wonderful, because it's gonna blast way past that. So let me go to that right quick, if y'all don't mind. And I hope y'all had a wonderful Thursday, man. This is Yahoo. Yeah, I'm gonna get back to this Yahoo news too, because it's important, man. But here go my portfolio. Y'all know I'm the sugar bear. My people call me EJ, Haitian Alex as well. But for today, I'm down 2.52%, which is the equivalent. Let me blow this up a little bit so y'all can see. Which is the equivalent of $542.82. That's just for the day, but I'm down for the week a lot more than that. But I ain't crying, ain't for the sale, nothing. Oh, I did pivot out of my Curious stock today because it was in the green. So what I did, I had like $2,200 worth of Curious. Got back to the green by after like 11:30 this morning. So before I let it drop, well, really, actually, Curious got back to the green yesterday. Let me back up. But I pivoted out of it this morning. It was going down a little bit, so I pivoted out of it, got my gain on that, took all of that, and put it and bought some of the dip on Coinbase and Neo. So as y'all see, my Neo, I got it was down today 7.66%, down to $31.10. So I mean, I got my average cost all the way down on it, so I'm not even mad about that at all. And like I said, Coinbase is down to $267 right now, as y'all can see, still moving after market a little bit. But I got my average cost down on that like 290. It don't show it right here for some reason. Let me see. I don't know why it don't show it right there. It should, but I got to go to the other one to actually show my average cost on it. Let me see. As y'all can see, I got $11,658 worth of Bitcoin. Not Bitcoin, but Coinbase. I'm sorry. And price, like I say, price right now 266. They show my average cost. Guess I got to go to the other window for that. But you see, charge point down. That's still one of my favorites as far as EV is concerned. All the EVs are down. Tesla, charge point, Neo, which is my favorite. I'm really big on Neo. I love Neo, man. I'm gonna keep buying the dip. It's like what they say about Wall Street. When the good stocks, when it's in the red, it's like the gift that keeps on giving. Y'all don't heard this saying before, but that's how it is on Wall Street on these good stocks. My IDEX stock is down, not a lot, but I like IDEX. G not, but these are some of the plays that I wouldn't hesitate to pivot out of to buy better dividend stocks or we say proven companies. I wouldn't hesitate. I ain't in love with it like that. And my Neo and my Coinbase, I'd never get rid of them, not right now. As y'all see Golden Nugget online, it's down a little bit, but it's still a good company, but they down. Coca-Cola ain't down, ain't been down for the longest. People still drinking Coca-Cola. Just keep going. Me too. AT&T, buy all the cooks y'all can for the summer, for the cookout. Please do that. So stock continue to do good. AT&T ain't seen no red in AT&T in the last month. Bank of America, we stop right here. Financials. In a period like this, what we see in this bear market, in the stock market, financials never let you down. What I mean by financials, banks, credit card companies like Bank of America, Citizens Trust, keep iterating this. Oh my God. Y'all know what I'm trying to say. I'm trying to go. I'm gonna keep reiterating this for the next 6 months. Financials is your safe place for your money. Banks, Morgan Stanley, J.P. Morgan, Chase, these you're not gonna lose money. You're gonna only gain. Um, Apple, Tech, like I say, Tech been getting hit. Apple's still good, but it's down a little bit. 124 is kind of caught back up out the market to what is basically where it's been for the last 2, 3 months. But at one point, Apple was at like 160, 170. It's gonna get back to that probably after June, maybe July. So if you got Apple, hold on to Apple. And definitely the same thing with, like I just told y'all about Neo and Coinbase. If you catch Apple in the red and it's down below what you bought it at, buy it, buy it, buy it. Because Apple ain't going nowhere. Ford, I'll probably wind up pivoting out of this. But what I like about Ford, they into EVs now too. What I do like about Ford, they stay as far as their standard. They don't lose a lot. They've been here in this particular position, even though I'm down with Ford when I bought them. They've been in this position for the last month. So they got to study. This is their pace. They're not going to too much drop below this line. So Ford is still good, but I might pivot out of them as soon as I catch up with any green on that. BNGO, I used to love BNGO, but man, Bio Nano Genomics, but man, they getting beat down. They're getting beat down. So I've been red with them for a while, right along with y'all. I know a lot of y'all got BNGO too. Iron Mountain, this is the REIT I was telling you about, the real estate stock. Great stock, beautiful stock. Get it when you can. Capital Southwest is another up and coming growth stock I love. But they've been down a little bit, but they came up today a little bit. Main Street Capital, y'all see the ticker symbols. I should be saying the ticker symbols as I'm talking. But you see the ticker symbols, MAIN, great stock. They just caught up a little bit today. And ASI, Technology Holding, ticker symbol ASX. They kind of was down today, but they caught up at the end. LVGI was just like it's a little company, man, that people was talking about. I jumped in on it. It didn't cost a lot. I'm not really worried about them. I don't have a lot of. I mean, you see how cheap it is. It's at 0.07 cents. So that's a company I'm not really worried about pivoting out of. It's there. It was an experiment stock that a lot of people thought was going to blow up. You know what I mean? And uh, it's okay company. They got a good CEO, but I don't know. I just wait. But I'm definitely not going to pivot out of it while it's red. Wait till it catch up, and then I get it out of my portfolio. But like I say, man, focus on main at this point. Financials is the best place to put your money at right now in a bearish market. And after you put your money in those financials, keep those financials for long term. For we're talking 2, 3, 4, 5 years. It's gonna pay off. Believe that. So as y'all can see, I'm down, really down. Like I'm really down more than this. My portfolio should be at least around about 27,000 right now. But you see, it's at 20,902, just down for the day, $600. But I'm not worried about that because I understand how the stock market works. Another month after June, my account would be at least around 35,000. I'm talking about that's without me adding any money to it. I don't add a lot of money to my this portfolio anyway. I have a webull account too that I haven't really showed, but I don't really add but my webull account. I just basically do option plays, but I don't basically add money to this. I let it do what it do because I understand it. The hedge fund guys don't scare me, so don't this is what I want to tell y'all, man. Don't allow, let me go on over here now. Don't allow Wall Street to shake you up because this is what they want to do. They actually want you to get nervous, sell all your stuff so they can get it. Okay, that's what they want you to do. They try to weed out the weaklings. I always tell y'all this because it's real. They want to weed out the weaklings because most people who don't understand the stock market, don't understand investing, don't understand historical highs and lows, 52-week highs, 52-week lows. History don't lie. History don't lie. People that don't understand these things though, don't understand how this works, they get nervous. They get up out of it. Oh, it ain't for me. And they're right, it ain't for you. Because you don't understand that you got to ride these rough times just like you're gonna ride the good. But believe me, you got your money in great companies, which is easy to research and do your D&D, your due diligence, you're gonna you'll be able to retire just from investing in the stock market. So let me just give y'all some stats, man. I didn't want to make this video too long. But and it's just a news, and I always tell y'all to go to Yahoo. Yahoo ain't really talking about much today. A lot of different things they was talking about. I seen an article. Where is it at? is it morning brief? I wanted to share with y'all. For those of you who don't actually, Yahoo has this morning brief. Oh, a good inflation reading for corporate profits. And that's another thing. I read this article. This is a good article too. Inflation is what's going on right now. So this is scaring a lot of people. And inflation is most of the time a bad thing because inflation actually makes the U.S. dollar go down. Uh, but this is something that the Federal Reserve, they have to do. The Feds have to come in and they have to do this. They have to regulate it so it won't get too bad. So when the Feds come in and they do their particular regulations on it, they have to. They have no choice. And I like what they're doing now. I like what the Fed's doing now because they're not. They learned from the mistakes of 2008. 2008, they didn't do nothing. And it was a lot of, and this is why I know the stock market is not going to crash like it did in '08, because there's a lot of things that was in play in '08 is just not going to be in play now. Like, number one thing was real estate in 2008. At that particular time, man, you could get money to buy houses, and basically banks were giving people money without even asking for evidence that they even worked. It was just easy. You know, they was get if you say you needed a house, you was gonna buy a house, or whatever. You know, lenders were just giving out money so you could buy houses. That caused a crash too. Warren Buffett warned about that years ago anyway. So that's something that they've changed the laws on that won't happen again. And the Feds didn't actually step in and put no regulations on it on the inflation. Now they have. So that matter of fact, they're doing a whole bunch. They're doing a whole lot of stuff. I know a lot of people are anti-Federal Reserve. I get it. Anti-centralized banks. I am too. I don't really like centralization. That's why I love crypto so much because it's actually attempted to decentralize banking system. But at the same time, Federal Reserve has some good points, and they actually stepping in doing what they're supposed to do this time. So I wouldn't get nervous about. Like I said, go back and read some of these articles on Yahoo, and this is free for y'all to download and just read their news. Some places are charged for like premium news, like Tip Ranks or maybe Bloomberg. You know, you got to pay for their reports, blah blah blah. Motley Fool, but Yahoo is good enough. They saying the same thing. Charles Schwab, you can actually download Charles Schwab without even putting a dime, and it just create your account with Charles Schwab. Charles Schwab have news every day, all day, that covers everything, and you can just get that for free just by downloading Charles Schwab and getting an account with him, not even putting money in. So this is basically the thing. What I want y'all I want to get into y'all head, man. Don't get nervous. Understand what's going on. This is a historical thing. These 52-week highs and lows are basically accurate. It's like prophecy. We call it money prophecy, financial prophecy, whatever you want to call it. But it happens, and it's going to always happen every year. Probably not this bad because you got to think now. Even though 2020 was basically the COVID-19 year, but 2020 was actually a bull market. People made a lot of money. I made a lot of money in 2020 in the market. So, but this is what I'm saying. This is the repercussions from COVID-19 coming off of 2020. And this is why the corrections and the pullbacks are longer than expected. So probably next year, especially with all this vaccine going through and Joe Biden not really opening his mouth up a lot, they kind of keeping him quiet because he said a lot of crazy stuff. Hopefully he get the gas thing back under control. Then you're going to see your money grow. You're going to be like, wow, the Wealth Giant told me. So listen, I just want y'all to I'm gonna do my next video. Probably gonna do it today because I gotta go out of town tomorrow. Like I said, I'm going to New York. Um, but I'm gonna make some more videos just on screening stocks, just so y'all can know how to find good stocks instead of just trying to look on these Facebook groups, listen to all these dodos who don't know nothing about stocks. Even though some of those Facebook groups are good, um, you know, but you have to learn how to do this yourself. So then you can see what you're looking for, what you're putting your money into. You have to understand large caps, mega caps, small caps, medium cap companies. That makes a lot of difference. Understand what PE is as far as price to earnings. All of these things are important, very, very, very important. So just before I even leave this video, I want to say this. These videos that I make is strictly for edutainment. We mean education and entertainment. I'm not your financial advisor. And I just want people to understand that. So, but I do have a lot of experience in the stock market. I have a lot of experience in the stock market. And oh, somebody's at my door. So with that being said, man, I'm going to make this next video on stock screening so y'all can actually see what's going on. I hope y'all enjoyed this video. Hit the like button. And if you ain't subscribed, please hit the subscription button below. I'll see y'all on the next one. Peace out.